Since early April 2025, President Trump has unleashed a barrage of tariffs, targeting China with duties as high as 245% on imports. This escalation followed a 145% tariff on Chinese goods, prompting Beijing to retaliate with 125% tariffs on U.S. exports. The trade war intensified when the U.S. imposed levies on Chinese ships docking at American ports, a move that sparked global concern. But here's the twist. On April 18th, Trump hinted at softening his stance, saying he's reluctant to keep raising tariffs to protect American consumers and is optimistic about striking a deal with China. Why the sudden shift? Markets have been in turmoil since Trump's tariffs kicked off on April 2nd, with fears of inflation and a global economic slowdown. The World Trade Organization warns that U.S.-China trade could plummet by 81% this year, predicting a 0.8% decline in global goods trade if tariffs persist. Japan's Finance Minister Katsunobu Kato voiced strong concerns, calling Trump's policies a risk to the global economy. Meanwhile, China's President Xi Jinping is pushing back, urging Southeast Asian nations to form an Asian family to counter U.S. trade restrictions. Social media is buzzing with reactions. On Twitter, Reuters reported China's 125% tariff hike, highlighting the tit-for-tat nature of this trade war. Another user claimed Trump might be caving under pressure, pointing to a 90-day tariff pause for most countries except China. This pause, announced on April 9th, gave nations like Japan and the UK time to negotiate, but China remains the main target. China's not backing down. In a bold statement, China Daily called out the U.S. for living beyond its means and refusing to negotiate on Trump's terms. Beijing even replaced its trade negotiator, appointing Li Chenggang to lead talks, signaling a hardline stance. Xi Jinping's recent Asia tour further underscores China's strategy to strengthen trade ties with countries like Malaysia, aiming to offset losses from U.S. tariffs. The economic fallout is real. U.S. Federal Reserve Chair Jerome Powell warned that Trump's tariffs could slow growth, fuel inflation, and raise unemployment risks. Gold prices hit a record high as investors flocked to safe haven assets. American companies like Boeing are caught in the crossfire. China reportedly halted deliveries of Boeing jets, leaving planes in limbo. Tesla's plans to ship Chinese parts for its Cybercab and semi-trucks were also disrupted, forcing a rethink of production strategies. Many people are calling this a doom loop trade war, with fears of a U.S. recession growing. Consumers are feeling the pinch too. Some U.S. businesses have introduced Trump surcharges to offset rising costs, and imported goods like carpets now face a 28% tariff, making them pricier for Americans. California even filed a lawsuit against the Trump administration, accusing it of abusing power and harming the state's economy. So, who's winning this trade war? Analysts like Veena Najibullah from the Asia Pacific Foundation say the 245% tariffs make it nearly impossible for China to sell to the U.S., but the costs are high for both sides. Trump claims tariffs are bringing in $2 billion a day, but U.S. Customs and Border Protection reports just $500 million since April 5th. Meanwhile, countries like Zimbabwe are suspending tariffs on U.S. imports, hoping to curry favor with Washington. Trump's strategy is backfiring. The New York Times calls his tariff war amateurishly executed, damaging America's global image and threatening world trade. China's exports to the U.S., $438 billion in 2024, are taking a hit, but Beijing's diversifying to other markets, with exports to non-North American regions expected to grow by 4 to 9% in 2025. Trump's push to bring tech manufacturing back to the U.S. is also faltering, with experts saying high costs and exemptions disincentivize onshoring. As the U.S. and China navigate this high-stakes standoff, the world watches closely. Will Trump's deal-making optimism lead to a breakthrough, or are we headed for a prolonged economic battle? Drop your thoughts in the comments, and don't forget to like, subscribe, and hit the bell for more developments and stories that matter. Thanks for watching, and we'll see you in the next one.